My name is James Stark and I cover the banking sector for SBG Securities, and I'm delighted to be your host today. We are very excited to have Jonker join us. Coen is the executive chairman and founder of Tyme, a digital banking business operating in Africa and Asia. Tyme's flagship project is Tyme Bank in South Africa, which was launched in February 2019 and has since grown to over 3 million customers, making Tyme one of the fastest growing neobanks worldwide. Coen is no stranger to corporate South Africa, having started his career at Edwin Nathan Corporate Law Advisors, now ENS, and becoming its CEO in 2000. Since then, he has served in numerous capacities in the banking sector, including at Netcore Investment Bank on the executive committee, at Standard Bank as a director of community banking, at Deloitte as a partner in the strategy and innovation practice, at the Commonwealth Bank of Australia, leading CBA's digital initiatives across Asia, based out of Hong Kong, and then as the executive responsible for CBA's international retail banking and insurance business. At the end of 2018, Coen partnered with African Rainbow Capital to buy the Tyme business from CBA. Coen holds an MBA from Gibbs and 2 law degrees with honors. He has also held multiple board positions, including eBank Namibia, Vietnam International Bank, and PT Bank Commonwealth in Indonesia, which he chaired until 2018. Before I hand over to Coen, please allow me to run through some of the formalities. This session is being recorded, and that recording will be made available via the ARC website after this call. From a format perspective, Coen will make a brief presentation, bringing us all up to speed on the Tyme story so far, and thereafter we will open up to Q&A. The bulk of our time together today has been allocated to Q&A, so I do encourage you to make the most of this opportunity, and let's get a good conversation going. On the Q&A, if you could just hold off on your questions until Coen has concluded his presentation. And when we take questions, we'll be taking them in one of 3 ways. You could put your hand up, and when we cue you, you're welcome to put your question directly to Coen. Alternatively, you can post a question in the session meeting chat. Alternatively, and if you prefer to remain anonymous, you're welcome to email me at james.stark@sbgsecurities.com, and I'll pose the question on your behalf. And lastly, before we get going, a massive thank you to Coen, Ainsley Moors, and the team at Tyme and ARC for making themselves available for today's session. So without further ado, and with great pleasure, I'd like to hand over to Coen Jonker. Coen, over to you.
Thank you, James, and thank you for that warm introduction. I'm looking forward to spending the hour with you guys, and please, my invitation to you is don't be overly polite. It's a rare opportunity for me to spend time with some of the smartest minds in the banking industry and financial services, and people looking at us carefully. So I really would appreciate your toughest questions and your comments and suggestions. James, I also have with us today Susanna from our Hong Kong office, who will help me drive the slides, and who she's in our strategy team and has also helped me prepare. So if I get stuck on some of the tougher technical questions, I might ask Susanna for her opinion as well. So I thought it would be useful to just start with a slide just describing who we are as Tyme and how we position ourselves in the international market. So if people ask me sort of what do you do at Tyme, I say to them, we design, build and operate digital banks. And so we see ourselves as a multi-country digital banking group, focusing on emerging markets, and particularly focusing on this idea of covering or bridging the digital divide through integration into physical retail environments. And I'm going to talk about that idea quite a bit today. So Tyme is in Singapore, and that's where we do business development strategy. We also do some of our data analytics from there. Then we have an engineering and development hub in Ho Chi Minh City. So we currently employ about 130 engineers and developers in Ho Chi Minh City in Vietnam, and that will go up to about 190 by the end of the year. James, as you mentioned, we've got our flagship project, Tyme Bank in South Africa, where we employ about 230 people. And we also have in South Africa Innovation Garage, is a small team of people focusing on hardware and software innovation, and a factory where we build our own, manufacture our own hardware, whatever we cannot buy from the market. And then you'll see on the top right-hand side of this, on the slide there, you'll see Tyme in the Philippines. That's the bank that we're in the process of designing and building in the Philippines. And the name Tyme is actually linked to the family that we're partnering with in the Philippines called the Coen. And at the end of the presentation, I will talk a little bit more about that. Susanna, going to the next slide. We very much see ourselves as a bank that banks the underserved. And in emerging markets, as we know, a lot of people are still underserved by the banking industry. It can be argued that in some respects, the banking industry in emerging markets is still very much where telephony was when mobile operators just started gaining momentum in emerging markets. And on the slide, you'll see some statistics. The one I want to focus on is that one in the middle, in the blue, that says that 98% of retail transactions are still carried out offline. And what we mean by offline here is really in physical retail stores rather than people participating in e-commerce. And so, whereas I would think that there is a consensus that in the long term, we all predict that the entire world will bank and will shop online, the reality is that this is not where customers are today in emerging markets. They still very much operate in the physical retail world, and many of them, as you see from that other transaction, on that other number on the right, is still conducting their lives in cash. There's an old Sufi saying that we can only walk from where we stand. And we would say that as Tyme Bank, we differentiate ourselves most critically from other digital banks in that we follow that logic in the way we've designed and built the bank. Susanna, the next slide. What we say is that the democratization of banking and the digitization banking starts with taking people from where they are today in the physical world and taking them on a journey into the digital world. And having that philosophy actually fundamentally changes the dynamics of a digital bank in an emerging markets. And what we've done here on this slide is just to compare for you, the difference between a pure digital bank on the left and the hurdles that pure digital banks face, and the power of actually having a hybrid model that integrates into the physical world and how that differentiates you from a pure digital bank. So if we think about pure digital banks in emerging markets, they generally tend to be niche players. And we, from the start, set ourselves the ambition not to be a niche player. We set ourselves the ambition to be a top 3 retail and SME bank in any market in which we want to operate. And in order to do that, you can't afford to just find yourself in that small digital niche at the edge of an economy. So a typical digital bank has small, narrow customer segments. So they typically will only go after millennials, digitally native customers. They limited to the data that they have available on their own platform, typically, or other data they can buy from the market. Digital banks have a huge challenge around friction around cash. How do people get cash into an account? How do they get cash easily out of an account? And what is the cost of that? And for a digital bank, that is a major problem. And then largely in a digital environment, you wait for the customer to come to you on their phone screen. And it's only to the extent that you can convince them to come to you on their phone screen that you can engage with them, or in the digital environment. And what we've done is we've sort of overcome these obstacles by integrating into the physical environment which means that our customers have more cash points where they can deposit cash than any other bank in the country today. So for them, cash deposits is frictionless or are frictionless. They also have unlimited cash withdrawal capability. And so we've taken away that sort of cash friction that many digital banks have. We're able to integrate into many more digital environments through our retail integrations. And we are able to facilitate much more frequent engagements through our ambassadors in the real world. So with that in mind, let's see how we've done in South Africa. So this next slide just is a snapshot of how things are going for us in South Africa today. I'll go into some of the things in a lot more detail, but just at a very high level, we're very happy with how things have gone in our first 2 years. So some of you will remember we launched the bank, Tyme Bank, in February 2019. So we've now been in market, actually today, we've been in market for a year and 1 month. And we're now on 3 million customers. We're continuing to grow at about 110 to 130,000 customers a month. About 60% of our customers are active on a 30-day rolling basis. And for us, active customers, somebody who we've made money from in the last 30 days. We're very happy to share with you that we've for the last quarters, we've tracked Capitec. We've just been behind Capitec in terms of Net Promoter Score. And this quarter, for the first time, we are marginally better than Capitec, which gives us the highest Net Promoter Score of the big banks in the country against the industry average that's now sitting about 33%. So that 57% Net Promoter Score is an important number for us. Our research shows that Net Promoter Score is very predictive of future market share movements. We continue to be the cost leader in the country. I think on most measures, we're between 30 and 50% cheaper than the cheapest other bank in the country. And we continue to maintain and grow our physical distribution network through our kiosks, with about 800 kiosks out there. So just to remind you how this works, and I think for some of you this will be sort of old news, but I think it's worth just giving you a sense of what a customer journey in Tyme Bank looks like. Susanna, if we can just go to the next slide. So apologies, this slide is a little bit busy, but hopefully you can follow with me the numbers on the slide. So the graphic you see there is sort of a mock-up of a retail store. In South Africa, that would be a Pick n Pay or a Boxer store. On the left of the slide, you see our kiosk there. So the kiosk is essentially a digital self-service interface that we deploy inside retail stores. We also have a mobile version of this that we deploy in other channels, such as in our partnership with the ZCC Church. That we can also do for instance, insurance channels and other channels. Typically, a customer will come to us in one of two ways. They will either come to us online, so we do quite a bit of marketing online, and about 15% of our customers will first sign up with Tyme Bank online. It will take about 3 to 5 minutes to open a bank account online. But once you've opened that account, you don't yet have a debit card. 85% of our customers don't come to us online. They come to us at the kiosk initially. So the customer journey coming to us on the kiosk will be, first the customer walks into the store. They see one of our ambassadors in the store with these kiosks, and they will walk up to the kiosk. They need no documentation. And in about 3 to 5 minutes, using only their fingerprints and their phone, the customer will sign up for a fully KYC'd Tyme Bank account. And at the end of that process, we print for the customer, we print a personalized Tyme Bank debit card that is immediately live. And that sort of 3 to 5 minute account opening process sort of compares in South Africa with a best of breed process of about 40 minutes of form filling before you can get an account. Then, very importantly, once the customer's account is open, we encourage the customer to go to the closest cash register in the Pick n Pay or Boxer and to deposit money into the account. And as of this month, about 70% of our customers who go into that store and open an account will immediately go on the same day or just after they've opened their account, will go and deposit money at the cash register inside the Pick n Pay. From there, the customer now has money in their account, they can shop. This product is integrated into Pick n Pay Smart Shopper program, which, depending on who you believe, is the most popular or second most popular loyalty program in the country. The customer will then shop, be able to, when they come back to the cash register, they would be able to then get additional Smart Shopper points on the card, and they would also be able to withdraw money at that till point. And we provide in Pick n Pay and Smart Shopper unlimited free cash withdrawals for our customers. Then we've also just launched and in the process of scaling a buy now, pay later product called Tyme. And with that product, one is essentially able to get interest-free credit on your account. And the mechanism is really that product is funded through a merchant discount, and the customer gets another 2 months credit on items that they buy through Tyme. In the back, we've got a data analytics program running that analyzes the customer, takes in all the data, and puts every customer on a unique adoption journey to adopt our products. So that's typically the sort of the journey that the customer will go through to get a Tyme Bank account. And as I say, we've got about 3 million customers who've gone through this journey. 85% of them came straight into the store. 15% of them went online and then would later come and collect a debit card at the store. And about 60% of them on a 30-day rolling basis at the moment we are making money from. So on to the next slide. Just to give you a sense of the way we think about a product view of Tyme Bank. So we very much think of ourselves as a platform play. And what we do on the platform is our thinking is that we bring to our customers high frequency banking products that they will use every day, and that we can manage, we manufacture, manage and run at a very cost-effective, on a very cost-effective basis. All other more complex products, we essentially become a curated marketplace where we find the best of breed products in the market, and we expose our customers to those products through our various distribution channels, which is our kiosk, our online channels. So just to take you briefly through our products, the heart of the bank is retail and transactional bankings and savings, and that's what we launched with 2 years back. It's our everyday personal account, our savings account linked to a debit card with all sorts of services on there. Value-added services, lifestyle services, and that is it's a growing part of our business, is adding more and more value-added services to our customers. Then on the lending side, our lead product that I've described a bit earlier is Tyme. That's our buy now, pay later product. You'll be aware that this is already a very popular product elsewhere in the world. The biggest fintechs, both in Europe and in Australia, are buy now, pay later players. So we see huge scope for this product. But we also have an unsecured loan product that we've pulled back on under COVID, but that is essentially sitting ready to launch at the right time. And we'll add other products like salary advances and other innovative lending products over time. Then we've got third-party products. In insurance, we're primarily partnering with Hollard, but we will be adding also other insurance from other players to the mix. We will be launching a credit card later this year in partnership with RCS. and we'll also be adding longer-term investment and savings products with partners to the mix. And there's really no limitation to how many third-party products we can actually sell through our channels. It's really about curating those products and making sure that we offer the right product to the right customer at the right time. A very similar structure on the business banking side. So we started with a sole proprietor account on the business banking side. We've got 44,000 SMEs currently on the platform and growing rapidly. And we will also be in a combination of a few proprietary products plus third-party products, expanding our range of products. So let's just go a little bit more then into what our customer profile looks like at the moment, who our customers are. Susanna, on the next slide. And what you will find is that our customers is pretty much a cross-section of South Africans. You'll see here in terms of age skew that we pretty much represented across all the age categories of customers. We have a slight youth skew, but actually it's very slight. All in all, we sort of well represented across all age groups. You'll see that on the SME side, we've got a bit more of a youth skew. So we've got about 55% of our customers that sort of more on the younger end. But then there's a very interesting aspect, and that is that we find that we've been a very attractive bank for women in particular. Last year, we won the Female Economy FinTech of the Year award from Women's World Banking. This is a worldwide award for the most innovative service of female customers in the world. And what we see is that particularly at the bottom end, we're very popular with women. So our net promoter score amongst women in sort of the LSM 2 to 4 range is 69, which we think is the highest net promoter score with any segment ever. So at the moment, I would say that if you ask me, how do I feel about our current customer spread? We would say, and certainly our South African CEO, Tyme Bank CEO, Tariq, and I would say that we've done well in serving the bottom end of the market, underserved customers, but we're probably a bit more overweight there than we'd like to be in terms of long-term sustainability. So we will be working over the next 18 months, 2 years, to become more and more attractive to higher segment customers. So getting a little bit into how it's going from a customer adoption perspective. Susanna, if we can go to the next slide. Here, what we've just done is to show you what's happening with customer deposits. And so what you'll see, the piece on the left, the yellow bars are showing you the trend of new deposits into the bank over the last year. And you'll see very nicely year on year, if we compare February a year back with this year, we've more than doubled our monthly inflows of deposits. You'll see also on the red line, that's just the trend of our active customers is sort of growing nicely from 50 to 60%. And that is actually gaining more momentum. So if you look at our vintage analysis, we have a very nice trend of old vintages becoming more and more active over time. So we actually have a tailwind there of active customers coming through from old vintages. And then we've just shown you on the right our vintage analysis of average savings and deposits per saving account. And you can also see that they sort of how the vintages are all trending up from a deposit perspective. Next one, Susanna. Also just sharing with you the transaction trends, and something that we track very closely in the South African business is our transactions per customer per month. and we track those by vintage. And what you see, it's a sort of a power curve over time, where customers start in the first month only doing 3 or 4 transactions with us. And then as this vintages mature, in December, we actually sat with sort of an average around 9, just over 9 transactions per customer per month. And the same kind of trend is happening in terms of unique transaction types, where customers tend to join us for one use case, either for money transfers or for saving, or for swiping their card. And we do a lot of active base management, where we try to encourage our customers to do more transaction types with us. So you'll see that we're now sort of sitting at about 3 unique transaction types, 3.5 unique transaction types. And our job is to continue to drive those unique transaction types up. Now, I guess the exam question, the big question is, if we're driving customer acquisition, we're driving more transactions, and over time more products and services on the platform, what is happening to our cost base? Are we able to sustain a cost advantage? And on the next slide, we try to give you a bit of a sense of the trend as far as the cost base of the business is concerned. So what you see here on the yellow bars is our operating expenses. Really over the last 3 years, if you look particularly at fixed costs, the trend is that we've been able to cut our fixed cost year on year. From 2019 to 2020, we've been able to cut by about 26%, and we cut by another 25% from 2020 to 2021 on fixed cost. Of course, what one has is the counter to that is, as transaction volumes and customer volumes increase, you also have a trend of increasing variable costs. But I think what you will see here, the red line shows you our customer growth. What we've been able to do is essentially have cost be overall cost come down while we're growing our customer base. And we think that if there's one slide that sort of epitomizes what we believe is our long-term sustainable advantage in the business, this slide is it. We believe that the future of success in banking, with shrinking profit pools generally in the banking industry, particularly around transactional banking and savings, we believe that the ability to maintain structural cost advantage is the key to long-term success, and being able to play against incumbents as well as new competitors. And this is sort of half the story, because the way we think about it, there are 2 big costs that you have to keep under control. This piece is your operating costs, which is absolutely key. The other piece that is going to be very important in the future is the cost of risk. And here, the way we've designed our data and analytics stack, the way we deal with data analytics, customer data analytics, we think is another key long-term competitive advantage, which I don't go to in this presentation in much detail, but I think is something that in future we can talk about more, and that we think is absolutely key to long-term success. So going from here to comparing a little bit what we look like against competitors in the South African market. And here I'm a little bit tentative, because I've got a lot of, James, we've got a lot of experts on the table here on the competitors. So these are our amateur attempts to do some comparator. So the first year just looks at retail operations expenses per customer. And this is at our current active customer level. So we're just comparing this on our current active customer level. And you can see even at these levels, where we're still very far from scale in our view, we're already very significantly cheaper, more cost effective on a per customer basis than the traditional big 4. And we're already comparing quite well with Capitec. The other 2 slides, James, are a little bit cheeky, because they compare what we predict will be in future. But again, we believe from a cost to income ratio, and once we break even from an average jaws ratio perspective, we will be in a different league from the incumbents. I'm mindful of time, so I'm just going to touch on two more things. The next slide, just to give you a comparator with the well-known digital banks out there. And what we've done here is we've taken the two big ones in emerging markets, being Tinkoff and Nubank. We've taken the well-known European ones, Revolut, N26, Monzo, Tyme in the US, and the big winner in South Korea, Kakao Bank, and just sort of compared a little bit what we look like. And I think the message in this slide is that even though we're the youngest of all of them, and we're not at scale yet, we're already starting to compare fairly well from a funding per customer perspective, what it's costing us to get our customers on board. That number should come down significantly as we double from 3 to 6 million customers over the next 18 months to 2 years. And what we're showing here is really that we can compete with all these players from a funding and cost perspective, whereas we have a significantly wider range of channels. And then, Susanna, if we can maybe just jump to the last slide and say something about the Philippines. I just wanted to mention, I know, James, there were some questions about the Philippines, just to give you a sense of what we're doing there. It's a very attractive market, about double the size of South Africa, strong GDP growth. We think about 2.5 times the addressable market in terms of sort of middle class and emerging middle class customers. And we are partnering there with the largest retail player in the market, JG Summit, controlled by the Coen family. That essentially gives us on a platter everything that took us years to put together in South Africa. Gives us the most valuable loyalty program in the country, gives us the biggest retail network in the country. And there we will not start slightly different from South Africa. We will start with transactional banking, savings, and more time, our buy now, pay later product. But we will actually start in the upper middle market in the Philippines, penetrate that first as a with a very aspirational brand, and then move from there both up and down market. James, I'm going to stop there and hand over to you for questions and comments.
Yes, thank you, Coen. Very, very interesting indeed. While we're waiting for questions to come in, just a reminder, you can post one in the meeting chat, you can put your hand up and pose it directly, or alternatively pop me an email. So while that's happening, Coen, I mean, if I could take the prerogative as host and ask the first question here, and it's just something that struck me quite interesting going through the Nedbank results analysis recently. They've indicated that they'll be trialing kiosks in 5 Boxer stores. So I guess 2 parts to this question, really. I mean, how does that impact Tyme directly? And just more generally, I mean, do you see the retail shop floor becoming a space for shared distribution as a channel, or are you going to try and secure exclusivity in that? I mean, how does that play out from here?
Yeah, James, it's very interesting. We've been surprised that the market hasn't taken to retail floor space as more actively as an opportunity for banking. And we actually worldwide, we haven't yet seen kiosks like ours take off. Between us, I think that the one thing is that it's quite a tricky channel to get right. You know, when people talk about banking in the retail environment, I say they are, you know, we've been doing stuff in retail environment now for 8 years. There are 1,000 little tricks of the trade to get it right. And Nedbank themselves have tried it twice before and haven't succeeded. So we're watching quite carefully to see how they're doing it. So it's a tricky channel to get right, but if you get it right, as we've shown in South Africa, it can be a hugely successful channel. As of now, we do have an exclusivity in the Pick and Pay channel. So in Pick and Pay, we're able to be exclusive. But we will probably be expanding to more channels. And I think if the competitors are smart, we will be seeing more attempts at doing retail distribution in retail, banking distribution in retail stores in future.
Thank you. We've got a question from Chris Stewart from 91. Chris, please go ahead.
Thanks, James. Coen, good morning and thanks very much for your time. Just a quick question, I guess. The route to profitability in many of these banks is to grow the asset side of your balance sheet as well as the liability side of your balance sheet. In other words, a sort of liability gathering transactional business model doesn't necessarily pay the bills in terms of generating the appropriate returns. Putting assets on the balance sheet, but particularly putting risk assets on the balance sheet, involves capital consumption. And I guess the obvious question is, where's that going to come from, given your existing shareholding structure, the nature of your shareholders, their ostensible lack of the required amount of capital to potentially bolster your balance sheet during a phase during which you're growing risk assets. So what's your thoughts around that, please?
Yeah, a very important question, Susanna. If you can just go one slide back. Here we give you a sense of sort of our revenue mix in the year after break even, so in FY23. And you're quite right to say that long-term success is a function of playing both sides of the balance sheet. There's no doubt about that. But building a lending book from scratch is really very punishing from a capital perspective. And, you know, IFRS 9 has not made it easy at all. And so we have to think very smartly about how do we grow the business without being capital heavy. And we think that a big part of the solution there is high frequency lending. So more time for us, you can see there in the pinkish color there, more time for us becomes a very important product. And the reason is that it's not nearly as capital heavy as longer dated unsecured lending. And so that's where we will go first. But over time, we will go into other unsecured lending as well as selling other products. We do see in financial services that the biggest portion of, you know, or maybe what continues to be the most attractive piece of the profit pool is the distribution piece of the profit pool. So we do see that we're going to make more money in distribution than just purely off running off our own balance sheet, and we're going to play smartly by working with other people on leveraging existing balance sheets as well. Maybe just a comment on our capital position, just to say that you will be aware that we've just concluded a successful capital raise, bringing 2 new shareholders in. That capital we expect will be enough capital to bring us to profitability in South Africa, as well as to successfully do our phase 1 of our Philippines implementation. And of course, for a startup bank, capital becomes easier to get the closer you get to profitability. So whereas a year ago, I think we were quite anxious about capital, and a lot of our focus was on capital. Increasingly, we're confident that capital is not going to be the constraint that will stop us from growing in future.
Thank you, Coen. Chris, I hope that's answered your question. Coen, just another one that's come through here. If we look at sorry, I must get the right question here. You've made a recent appointment for a CFO, David. Interesting context. You've got a retail CFO joining a bank in a banking role. Can you perhaps sketch out more behind that rationale and what we can read into that, if anything at all?
Yes, we're very excited, James. We're very excited about Dave Pfaff joining us. He's just come out of being for 8 years Chief Operating Officer and CFO of Truworths. And that was a very deliberate decision to strengthen our commercial muscle in the retail environment. We still think that although, as I've said, in the long term, the future is not in physical retail, the path to success, we believe, is through physical retail. And therefore, having an experienced physical retailer in the team, I think is going to be, and already he's only been with us for a month, he's already proving to be extremely valuable in our engagement and our expansion into retail environments. Our plan for Dave, I don't think you'll mind me mentioning, is the first 18 months to 2 years, he'll be in South Africa, working with Tariq and the team to expand our commercial deals in South Africa, our retail footprint, as well as our product range. But the longer term plan for him is to join me in Singapore. He has experience as a CFO of an internationally listed business before. He was involved in listing data tech many years back. And our ambition is in a sort of a 4 to 7 year time frame to take the time to listing internationally. And he's the guy who we hope will help us to get that done as well.
Thank you. Just staying with the retail theme, and you've already mentioned, you know, the loyalty program through Smart Shopper, and we see a similar sort of model coming through in the Philippines. I mean, are you able to elaborate a little bit further on that, in that, you know, what does that data give you as opposed to maybe a traditional credit assessment process? I mean, what kind of advantage do you hope to gain? Or are you accessing a broader base of customers? Is it a different kind of customer? Is it a superior risk selection, or maybe going into a section of the market where maybe other players can't play because the client's file is too thin? Any color on what that does for you?
James, you're going to have to stop me on this one. I could spend the rest of our time together just talking on this topic. Retail data, particularly basket level data, is turning out to be a gold mine for a player like ours. It's an incredibly exciting data set. And you've touched on some of the big themes there. The first theme is thin file clients. So our ability to extrapolate from thick file clients to thin file clients through retail data is now proving to be quite powerful. And then and sort of going to thin file clients, going to even very thin file clients, we see is very relevant. Also allowing us to go up the risk curve by finding differentiated pockets of customers within the higher risk segments, and improving our predictive strength of data. I'll just give you 2 examples that I think people will find interesting. The first example is how people buy vegetables. We now see that we can predict with a very high level of accuracy 6 months in advance of default. We can predict deterioration of credit quality through people's pattern of vegetable buying, where they're going from fresh vegetables to frozen vegetables to canned vegetables, etc. We see the same kind of pattern with toiletries, that there's certain very predictable patterns of how people buy toiletries and cosmetics that becomes predictive in many cases more than 6 months in advance of actual default. So there's a lot of value there, and I think we're only scratching the surface. But the value also goes the other way, which is interesting. We're able, through combining banking and retail data, we're able to provide our retail partners with very unique insights that they're not able to gain by purely analyzing their own retail data. And it's that partnership around data that I think in the longer term becomes a real differentiator for people who play in that space.
Thank you. We've got a question from Daniel from Sanlam. Daniel, please go ahead. If you could just,
okay.
There we go.
Thanks, Coen. Quick one. I just wanted to understand the economics around your unsecured lending offering, how that's differentiated from existing products in the market. Will you be looking to differentiate on pricing? You know, is it the ease of accessing the credit through, I guess, what is a digital platform? Are you lending primarily into your, call it, existing customer base initially before sort of looking beyond that? And then I really just wanted to understand more Tyme better, you know, and how you actually make money on that. It sounds to me like you almost hope the customer takes longer to pay back, right?
Yeah, again, it's a topic on that I can spend a lot of time on. I'll try to be quite brief. So let me start with more time. So this is quite a classic product construct, although we've adjusted it for South Africa's unique conditions. So essentially how the more time product works is that it's instant credit at the cash register, at the checkout point, both online and in the physical retail store. And so how it works is the customer is in a Pick and Pay store. They want to buy a flat screen TV. They can't afford the 2,000 Rand one. They can only afford the 1,000 Rand one. And what we say to them is by using more time, you only have to pay half now, and the other half you pay over the next 2 months. The customer is already a Tyme Bank customer, has a dynamic more time limit available for buying that they can go and buy at the till point immediately, and we integrate into the retail store so that's a seamless buying experience for the customer. If you're not a Tyme Bank customer, you simply download the Tyme Bank app. You get scored dynamically in real time. You immediately know what you have available, and you can go and buy with that. The power with that from the customer's perspective, it's very quick. You know, if you're not a customer, it's 3 to 4 minutes. If you are a customer already, it's completely instant available credit. It is essentially interest-free credit over 2 months. So if you pay over time, so you pay half now, half a month from now, so a quarter a month from now, a quarter 2 months from now. So if you pay the way you should, it doesn't cost you anything. It's interest-free credit. The way we make our money is we essentially charge the retailer on that payment a merchant discount fee. And that merchant discount fee essentially covers our cost of debt, and we make our money from that fee. And as I say, this is the fastest growing retail credit product, in fact, retail banking product in the world at the moment. On term loans, the differentiation on term loans is really around easy and quick way to get the loan. So the loan will be distributed on our kiosks and our other channels. It's a very easy, quick loan origination process. And then we will be introducing into the South African market true risk-based pricing. In other words, our ability to have more data available and to score on that data, we believe will give us a price advantage on the unsecured lending. But unsecured lending, as I've mentioned, we've put the brakes on. That will be a slow burn for us. It's really more time that is the key product that we will be pushing into the market.
Thank you.
Thanks, Daniel. Coen, we've got one coming in on email. What are your views on the forthcoming, although delayed, launch of Bank Zero, and which part of the market are they targeting, and do you see any risk to your expansion plans from their launch? Thank you.
Yeah, James, we've been hearing about Bank Zero for a long time. I must say I haven't followed it closely lately, but from my perspective, and you guys should probably ask Michael this question, but from my perspective, I see Bank Zero very much as a niche player. My understanding is that they also want to do a marketplace, but Bank Zero will be purely online and will not attempt to compete head-on in the mass market. So I think it's a niche player for small business and for savings products, and we wouldn't see them for the bulk of what we do. We wouldn't see a Bank Zero as a direct competitor.
Thank you. We've got another one on email. Will you be partnering or white labeling your own products? What percentage of the profits do you generally get? It looks like the distribution dominates the JV profit share. Typically, if we look at other JVs in the market like Sanlam, Capitec, Standard Bank / Liberty. So some color really just around how your partnerships may be shaped.
Yeah. So yes, we're very much a partnership-based model. We think that the key to maintaining a low-cost base over time is not to bring everything in-house and try and manufacture all the products. I think the comment is right. The most valuable piece of the value chain is the distribution piece. The economics differ very much product by product. So very difficult to give you sort of a general rule of thumb of what piece of the value chain, of the profit pool we'll get. But one way to think of us conceptually as a bank is that we've launched a bank that operates as a general rule at about 1/10 of the cost base of a traditional player. And we also shrink the profit pool in the industry actively by doing two things. We give away a portion of the profit pool back to the customer by being a price leader. And we give a portion of the profit back to our partners, whether it is our distribution partners as retailers or our product partners in spaces like insurance or complex lending products. And we make our money by continuing to maintain the structural cost advantage and curating a great experience for customers. So a lot of our effort, if you look at our 130 engineers and developments in Ho Chi Minh City, a lot of our effort goes into creating that unique customer experience, the 3.5-minute account opening process, the 2.5-minute process for getting a funeral policy. Those are the things that we really focus on and that we believe will be the differentiator from a customer experience perspective.
Thank you. We've got a question from Nick Tyme. Nick, please go ahead.
Hi, Coen. Thanks. I'd just love to get your views around what are the criteria before entering a new market? And quite interestingly, within a very globally competitive digital banking space, how much is there to play for out there against that criteria?
Yeah, so let me start with the criteria and then sort of I'll talk a little bit about how much there is to play for. So for us, the criteria is really threefold. The one is a large and young underserved customer demographic. So there are probably a dozen or more countries in the world where you still have a large, young, underserved customer demographic. The second very important criteria is a progressive regulator, and particularly regulations around KYC and AML, and regulations around cloud-based computing for banking systems are key to us entering in the market. So we won't enter a market where the regulator doesn't allow us to take our entire AWS stack into that market. And then the third very important criteria is the maturity of the retail landscape. We best operate where there's a pretty mature and relatively consolidated retail landscape, such as the one we have in South Africa. So then once you've got those three criteria out of the way, the big job is looking for the right partner, because we don't think that we want to go into any market without a very strong local partner and one that is values aligned and has everything, including the deep pockets required to go into that country. Now, with that in mind, the prize is huge. Markets like the Philippines, Indonesia, Vietnam, Malaysia, Pakistan, and then if you go out of Asia, you look at South America, Mexico, and so on. Those are all markets where the players are still tend to all fight for 20 to 30% of the customer base. And there are just still very few players with both the cost characteristics and the distribution capability into the retail environment that can compete for the market we're competing for. So we think that the blue, what people refer to as the blue ocean opportunity in emerging markets for this kind of model is still immense.
Thank you. We've got another one. This is interesting. It's lapping over onto the telco space. Curious to hear Tyme's thoughts on Vodacom and MTN having another crack at mobile, building super apps in South Africa, and whether you expect this to cause any meaningful disruption.
It's a very interesting one, because I think those of you who followed South Africa knows that they've tried many times. I think I've lost track of the number of times MTN has tried. I think Vodacom's tried at least 3 or 4 times. And I think it's very tricky in a more regulated and mature market to really compete head-on with the banks. Having said that, I'll never underestimate them. I think Vodacom's tie-up with Alibaba, with Ant Financial, is very interesting. We've seen that platform perform very well beyond China in other emerging markets. So I think it's a space to watch, and certainly that's one group of players that could meet our low cost positioning. What I would say though is I don't expect either Vodacom or MTN to easily get to the point where people will start switching their salaries onto those platforms. I think if anything, they could do quite well as sort of secondary everyday transaction platforms if they play it really well. But I don't see them ever actually really breaking into the primary bank account space. But having said that, I'll never underestimate them. I think they've got huge muscle around them, and Vodacom has certainly lately been very successful in some niches within financial services.
Thank you. We've got a follow-on from Chris on the chat here. What affordability testing is required according to the NCA for the More Tyme product to be compliant?
Yeah, so the short answer is it's not an NCA product. So because we do not charge interest or fees on the product to the customer, it actually doesn't fall in the NCA. Having said that, we take our conduct obligations as a bank extremely seriously. So what we do is we do quite extensive automated affordability testing in the background. So we're actually able to, from the combination of bureau data and our own data and retail data, we're able to predict, income quite accurately, and we take a conservative view on that. So we err on the side of conservatism in assessing affordability. The nice thing of the product is we don't have to go through that laborious process of collecting bank statements and salary slips and things like that, which we in any event regard as a very outdated way of meeting affordability requirements.
Thank you. We've got a question from Neil from Coronation. Presumably the More Tyme model depends on customers not making full payment within the 2-month window. What percentage of balances do you expect to extend beyond the interest-free period, and what sort of LCR do you anticipate? I think that's credit loss ratio.
Yeah, so it's still very early days. So the first point to make is we actually do make money off people paying on time. And we have been very conservative in predicting how much money we'll make from late payers. So it's important that the model can stand on its own legs, that we don't only make money. This is, although very similar in structure to a credit card, it doesn't rely on the late payers to be profitable. I think that's the first point to make. We've gone quite conservative initially in our prediction on our predictions around losses. So we've sort of taken we've taken as a starting point for our models. We've taken sort of the average performance on an unsecured loan for a similar customer segment on a longer dated unsecured loan as a starting point. We think we can do better than that. So we'll start at around 10% and we'll work our way. We think we can do better than that over the long term.
Thank you very much. Ladies and gentlemen, we have time for one more question. If you want to pose it, let us know quickly. Otherwise, I think while we're waiting for that to come in, Coen, and just one last one from me, really. You've mentioned the shared infrastructure, the ability to go in with your AWS stack. So recent announcements also indicate, same stack across multiple geographies, etc. I mean, the idea sounds compelling, but practically, how achievable is it actually to get right?
Yeah, it is not an easy thing to get right, James, because the reality is that retail banking is still very much a domestic business, which means that countries are not the same. And there are some elements that require country by country customization, particularly around regulation, integration into payment systems, and particular customer needs and requirements. So we think that over time, the reuse is somewhere between 70 and 80%, and the customization somewhere between 20 and 30%. And you can only get that right if you're very disciplined about replicating your model, and very disciplined about the technology that you bring on board. So our logic is, it's the same platform, it's the same basic product set, it's the same fundamental strategy, and we only tweak the strategy on the edges as regulation and customer needs require. And we think if we can stay disciplined, it becomes extremely compelling, not just from the perspective of reducing technology cost, but also a very important thing in emerging market is aggregating your talent and your skills. Very few emerging markets have the right number of good data analysts and developers and engineers required to do these kinds of things well. So by putting all those skills together at the center, you don't only have a cost advantage, you actually have a skills and capacity advantage as well. And the one thing I'll add to that, James, is building a bank is a very different job from running it. And anyone who's run a bank before and then started to build it will realize that, you know, if you're a great company, property management company, and you've managed properties for a long time, it doesn't mean you're an architect who can design and build a new one. And so becoming serial bank builders, we think in itself becomes a very compelling competitive advantage, because we just become good at doing that.
Excellent. Coen, thank you very much. We have run to time, so I'm afraid we're going to have to leave it there. But on behalf of SBG Securities, thank you very much for spending the last 60 minutes with us. And thank you to everyone who's joined in on the call. Let us know if you want a copy of the presentation or the recording. And have a good day, everyone. Thank you very much.
Thank you, James.
Thanks, Phil.